Hello and welcome back. Today I wanted to discuss spin-offs and how they actually can help a business. So what is a spin-off, I guess, is the first part. So a spin-off is when a company or business takes an existing business within their that they also own and takes it out of their main business and spins it off into its own separate company. So the best example here is eBay. eBay acquired PayPal when it was just a startup for $1 billion, I think. And then it was part of the main business. So then there was eBay, and eBay owned eBay, the website, and PayPal, the company. But it was all under the eBay stock ticker. And then in around 2015, um, they decided to spin off eBay. And since then, or sorry, they decided to spin off PayPal. And as you can see, since then, eBay is up 161%. But meanwhile, PayPal from around that same time is up 372%. And if you actually look at past their recent dip, it's up even more. So, and now PayPal is actually worth more, 212 billion versus eBay at 42. So PayPal is now more valuable than eBay. And I think a big part of that was because of the spinoff. So why does this happen? So spinoffs by nature don't actually create value financially. They're not adding money to the balance sheet. The main value of a spinoff is focus. And this is very business oriented. When you are a business, you have a lot of a lot of levers you could pull to make more money. You can acquire businesses that are add-ons, what we call tuck-in acquisitions. So, if you I'll use Zillow as an example. Zillow recently bought a company that does bookings, that helps users do bookings. So they say, hey, we already have people coming to our site to look for rentals. If we can add in the ability for them to book a showing, that helps improve the product. And so it either makes the product stickier or you can upsell it to people. Salesforce has done this. Salesforce said, hey, we have huge relationships with big conglomerates already. We already use their CRM. Let's also add in marketing services. So they bought a marketing company, not a marketing company, a marketing automation company. So then you can just tuck that in and say, hey, you already spend $1,000 a month with us. Now you can spend 1,500 because we can sell you more services. So that's one way that businesses can grow is selling vertically. So they can either get more clients or they can sell more products to the client. And you can develop those products and features internally, or they can acquire a company. And that's what eBay did, and that's what a lot of these companies do. AT&T is another one that recently announced a spinoff, and they're spinning off their Warner Media, which is HBO Max, and they're spinning it off and merging it with Discovery. And so again, how does this create focus? Well, when the products are aligned, you know, acquisitions and creating new products and new companies can make sense. It can make a lot of sense, but they have to be aligned and add value. And to me, I think of it as a platform. You know, is the is it a feature or is it a company? That's what I like to look at it. So is PayPal a feature of eBay or is it a standalone product? And to me, PayPal can be used offsite of eBay. In fact, it is used predominantly not on eBay. It's PayPal actually recently announced I think they cut ties with eBay. They're not going to be doing as much with them, but um, or yeah, eBay is now going to use another vendor for processing payments. But eBay made up less than 5% of PayPal's revenues. So it was clearly a standalone product, and it could be. Meanwhile, same with Instagram. Is Instagram a standalone product from Facebook? Of course, some people use one, some people don't use the other. So you could see, in theory, Instagram be spun off into its own company. When does a spin-off not make sense? When they are all kind of part of one business line, and it's a feature. So the example is Siri. Apple actually acquired the company that made the AI that we know as Siri today. Is Siri, could it be its own product? But yeah, I don't think anyone thinks of her as a standalone product. It's part of the iPhone experience, right? Um, so that to me is a good barometer of could this be spun out? So I don't think Siri could be spun out, but I do think Instagram could be spun out. AT&T again, they do, and you actually saw their stock did very poorly. It ran up here, on the new on some good news, and then they announced that they're going to do this spin out of the HBO streaming service. And you can see since then it's down 27%. Huge, like, and that's quite a straight decline down, shockingly straight. But yeah, so that is, and again, I think it actually makes sense. I think it was a poor purchase in the first place. They said, hey, we run telecom lines. Let's also sell, news and media. I don't think that's a supernatural fit, and it's clear that you can have a media product separate from the cable lines. Verizon does not have Verizon and Sprint don't own media companies like that, and there are standalone media companies like Fox, which I think is called News Corp, that exists. So to me, there is a natural spin-off there, and I think it does make sense. And that is exactly what they're doing. They're saying, hey, we have underperformed the rest of the telecom industry. AT&T has. We need to focus just on what we do well, which is telecom. So they're spinning off the media part, and they're saying we're going to focus on this, and the Discovery is going to merge with HBO Max and Now and Time Warner, and they're going to focus on media because that's all they do. They're a media company, and I think that makes sense. If you're a media company, you can focus on media, and if you're a telecom company, you can focus on telecom. You don't have to be like, how do these business line items? How can we create synergies? Synergies sometimes happen; they can in business, but sometimes there's a great quote. I'm trying to think. Oh, synergies are hypothetical, but the value of focus is immediate. And I really do agree with that. And I want to bring this up because there were a couple other ones in the news recently. And again, AT&T stock, I am interested. I think that they both could be undervalued, potentially. But there was also announced that GE was doing a spinoff. And this is an example where spinoff makes a lot of sense because these companies just were conglomerates. And I think of a conglomerate, I use that term in a very negative way. I think they're stupid. And it's basically when a company has more money than it knows what to do with, so it buys a bunch of other companies and hopes that there's some synergies. So, they're spinning into three companies: a healthcare company, an energy company, and what is the third? I think it's like consumer electronic company. So they're going to make, blenders and dishwashers with one company, medical devices with another, and energy. So that's renewable energy and power business with the third. And I think it makes a lot of sense. The other reason is, think about if I'm an investor. Do I want to own a company and I think they actually announced it. No, where did they announce it? I mean, everyone's down lately, but you can't really see much of a pop, so it doesn't look like people are really responding much to this spin-off news. But I personally am a big fan. And again, if I said, oh, and it even says here, multinational conglomerate. Hey, I think there's going to be growth in the medical device industry. Okay, then I want to buy a medical device company. I don't want to buy, well, this company does make medical devices, but they also make consumer electronics and own an oil company. I'm like, well, what if I think oil is going to go down? I don't want to own that. I just want the medical device company. So again, it gives the company focus, and its managers can then focus only on what it has to do. But also, investors can bid up the price, and they say, hey, I think there's a boom in this. And if all medical device companies go up, you're going to see the medical device industry stock go up, but maybe not GE because it's three different companies, really. It's like a bunch of different divisions within one big company. The other one that announced it, similar actually, is Johnson & Johnson. They're going to split into the consumer brands, which are, we make Kleenex, actually don't know if they make Kleenex, but they make consumer brands, Kleenex, Q-tip, stuff like that. Again, I don't know if that's actually what they make, but those kinds of things. And the other brand, toothpaste, I think is definitely something, is medical devices and medical like they made the Johnson & Johnson vaccine. So they're a medical company, but they also have a consumer company that's more similar to P&G, Procter and Gamble. So again, I think it makes sense to split them up. I'm actually a big fan of this, and I understand why initially there were all these conglomerates where they built up, and some of them make sense. The only one that I really think makes sense is Berkshire Hathaway, because Berkshire Hathaway is not trying to run them all as one business. They say we are money managers. We invest money into businesses that we think are valuable. That's it. They let the businesses run on their own. They're not trying to micromanage them. They say, hey, like Berkshire Hathaway owns like See's Chocolate, small chocolate company. and they own a furniture store in, I was gonna say Omaha, but I'm actually not sure where. Berkshire Furniture Store, largest. Nebraska Furniture Mart. Here we go. It's the largest home furnishing store in North America, and they own it. It's a subsidiary of Berkshire Hathaway. They just said, hey, this business does really well. We want to buy it out. Keep running it how you're running it, but we want to own it. And that's it. And to me, that makes sense. Trying to buy a company because you think that there's some synergies, that's where you get into trouble. Because if there are synergies, like, Facebook clearly saw something with Instagram. They bought it for $1 billion. It's probably worth probably 500 billion now. I actually think if Instagram was spun out from Facebook, I actually think it'd be worth more than Facebook. Right? So if you split up Meta into three companies, WhatsApp, actually four, I guess, WhatsApp, Facebook, Instagram, and Oculus, I think Instagram's the most valuable of them. That's me. But so that was an amazing investment because they said, hey, we're buying your audience and we already have our tools for monetization, and they have done an amazing job of monetizing that asset. So there can be value in synergies. But you've also seen a lot of businesses buy a company with no synergies, and it just completely shoots himself in the foot. Again, AT&T, look at the last. Look at this. Look at this terrible looking chart. They've gone nowhere. Now, obviously, they have had been paying dividends, but they have been going absolutely nowhere for the last 20 years, and that's because of poor strategic vision and trying to make a conglomerate when I don't think it makes sense. So, again, I think GE did the same thing, and what they said, the strategy was basically capital. Hey, when you're buying a company, you typically do it with financing. So you say, we don't have $500 billion on hand. We're going to borrow money, which is why AT&T has more debt than anyone else. AT&T debt. They have $181 billion in debt, which is up from 168 billion. That's a ton of debt. If you don't know, Apple has like zero. They have like negative debt. They actually have way more cash on hand. They could pay off all their debt in an instant. So GE has 181 billion, and what's their market cap? T-stock. 167. They actually have more debt than the whole company's worth. So that's how much debt it is. This is an insane amount of debt. So they took a ton of debt to try to, and it can make sense. Again, if it's a good acquisition, the logic is, hey, we take on debt. We have this stable business of telecommunications that consistently makes money. If we can buy a business, and this is like a leveraged buyout. This is like what private equity does. Basically, and maybe I'll make another video on leveraged buyouts and private equity. But basically, what they do is they buy a business with debt, and they say we're going to use the cash flows from this business to pay down our debt. And because we're leveraging up using debt, we can make a great return. So I'll give you an example. You buy a business for, let's use just round numbers, for $1 million. You take 100,000 of those dollars of your own money, and you borrow 900,000 from the bank. And this business is a laundromat, and you think you can run it better than the old owners. So you do some marketing, you fix it up, it brings in some more business, and then 2 years later, it's worth $1.2 million. And you've been able to pay the debt using the income from the business. So if you think about, you sell it now for 1.2, you pay back the 900,000 that the bank made, that was the debt, and you have 300,000. Okay, remember, you put in 100,000 and now you have 300,000. So in 2 years, even though the whole business only went up 20%, right? So it went from 1 million to 1.2, your equity went up 3x because now you have $300,000 in cash and you started with $100,000 in cash. That's 3x. So the business only goes up 20%, but you made 3 times your money. That's how debt can increase your returns. And that's typically what leverage buyouts do. And this was the logic behind big conglomerates. Hey, we have a stable business. We have tons of cash flows. We can use those to pay down the debt. Let's leverage up, buy business. We'll make small improvements, and we'll basically own the business outright in 10 years, and then we'll have even more cash flows coming in. Again, when you can do it right, it makes a lot of sense. And Berkshire Hathaway's done that amazingly. They actually don't even use debt, but they sometimes they use debt, but they buy businesses outright and they let them run because they try and find undervalued businesses. Other companies like this, AT&T especially, bid up existing properties and tried to justify it by using synergies. Oh yeah, obviously the market thinks it's worth 30 billion, but let's bid 60 billion because when it comes into our ecosystem, we'll be able to upsell clients on this. And again, that is a real strategy, but you have to think, how realistic is it? To me, there are some things where it's very obvious that you can resell this product to someone else and there are synergies. And there's other cases where there's no such things. There's some synergies here. Oh, AT&T owns some cable subscriptions so that you can fold in HBO more easily, but it was minor. There weren't really huge savings here. So yeah, this is my thoughts on kind of spin-offs. I think they're actually a great move, and I think we're going to see more of them because I think during the 90s and 2000s, we saw these companies conglomerate and just swallow up a bunch of different businesses because they didn't know what to do with the money. And now they're big, bloated old businesses that look ugly. And so they're going to try and spin off as much as possible. So I think you're going to see more and more of these because there's some fast growing elements, like with the PayPal and eBay, where eBay was basically, it's done well lately, but it's basically a stagnant brand. It was going nowhere, up 12% over 10 years. And they said, you know what? PayPal needs to go free. They're being tamped down by eBay because the vision was eBay. Hey, how do we increase eBay's value? Not how do we increase PayPal's value? So again, I actually really like these. I might be investing in some spin-offs because I do think they're creative. I think they're great for the value of the business because I really do believe in focus. Having spent the last 5 years working um, at some businesses that have made acquisitions and some startups as well, you really do see that when you are distracted, and I worked for a business that did billions of dollars, and I did work for a business that made $1 million a year. I worked for a startup and I worked for a huge multinational, and the huge multinational is there's a million business lines and they're trying to just grow the entire pie. They're not focused on any one section, and any one section can get lost in the major thing. Um, when you're working at a startup, there's so much focus on one thing and growing that one thing. And I really, really think that focus is the most undervalued asset. We're so distracted, and this is maybe a bit of a tangent, we're so distracted by social media. I can tell you, I'm looking at my phone, checking things, and it can be very distracting. But at work, if a business has focus, they can really dominate. And so I do think spinoffs allow companies to focus in and create more value by really honing in on what they are delivering to customers. So hopefully this was interesting and valuable. Let me know in the comment section below. Are you interested in any of these spinoffs? I think Toshiba maybe even, or Samsung. I also was looking at that. GE, Johnson Johnson, and AT&T. What do you think of spinoffs? Do you think they're going to create value? Are you interested in any of these companies? Are you saying, nah, these are all boring, too boring for me. I want more interesting, high growth companies. So let me know in the comment section below. Thanks so much for watching and talk to you next time.